don't fully commit unless you have a proof of concept. Sometimes you can kill a side hustle very quickly. Sometimes a side hustle work, you need to double down. And when you realize your side hustle is giving you more upside than your full-time job, then it's time to do the side hustle.
Welcome, everyone, to the Road Less Traveled Show. This is a show about people that were successful in a previous career and left that career to go down a different path. I'm your host, Richard Coyne, and on today's show, we're so pleased to have Frank Xia with us. Frank, welcome.
Thank you very much, Richard. Thanks for having me here.
Absolutely. Pleasure to have you on the Road Less Traveled Show. So Frank, if you would kind of tell us a little bit about your background, kind of what have you done in your past? What's something you've done from a earn a living standpoint in the past?
Yeah, so I have a short version and a long version. The short version is I'm a tech employee at two IPO, and decided to do full-time investment. So that's like the short version. The long version is basically I joined tech company, changing from bigger company to smaller company, taking more risk, being lucky. So then I decided to realize, okay, maybe I can make more money and help more people by doing my own investment versus doing a full-time W2 job. So I want to pursue a more interesting, but also more uncertain way.
Okay. All right. So if I got that right, you were in a couple different tech companies.
That's right.
We're able to see some very positive gains from you, I guess, stock options and whatnot through that for yourself. So that's great.
Yeah.
So what did you kind of transition into that you're doing now more on a full-time basis?
Yeah. So right now, I'm basically doing two things. Number one is I'm actively identify investment deals. So I'm basically just talk to people, identify deals, focusing on the real estate investment side currently. Okay. And also I'm doing social content. So I want to build up my brand, give out free content, and also try to build up the audience.
Okay. So Frank, as you're analyzing deals, helping people find deals, what kind of deals are you looking at from a real estate standpoint?
Yeah. So right now I'm focusing on the bread and butter, which is multifamily. We focus purely on Texas because that's a region we're very familiar with. We have a few partners. Yeah, we have a few partners that is currently working very closely with us. So we are basically working together underwriting deals. And also I'm exploring other assets, for example, self-storage and mobile homes.
Okay.
Yeah.
Gotcha. All right. So again, investments in Texas. Okay, that makes a lot of sense. Again, Texas is a fantastic market. We all know great success stories at, the large cities, Dallas, Fort Worth, San Antonio's, they're all on fire. Houston is really a pretty good market. It's a massive market. People forget how big Houston is.
How big it is. It has a bigger population than Dallas, actually.
Yeah. Texas, Houston's the fourth largest city in the United States. Do you have investments in Houston or no?
It's mainly in Dallas. That's where most of the GP lives, but we have one deal passively in Houston, and it's doing okay.
Okay. Yeah, the thing, we've looked in Houston ourselves, and unfortunately what's happened in the past year and a couple months, 15 months. What's happened in the past 15 months is that insurance rates have blown through the roof.
That's entire Texas.
Oh, entire Texas, not just Houston, really?
Right. Dallas as well. Texas and so basically it's insurance and tax. All goes up huge.
Yeah, so we know that the coastal markets, like we've done some looking in Florida and the South Carolina, North Carolina coast, and that we know that in Georgia coast even that we know that they've got blasted with the coastal insurance hikes, which would make sense for Houston, but it's even affected Dallas.
Yeah, I don't know the exact reason, but I look at our bills every year and the number just hiked like 50%.
Wow.
Phoenix is actually intact, to be honest. I'm surprised Phoenix is very stable currently.
Yeah. We actually we looked at a deal. I want to say it was, someplace like Orlando. Orlando's not coastal. I mean, it's a couple hours from, well, not a couple hours. I mean, it's probably an hour from both the Gulf and from the Atlantic, but yeah, they apparently they're jamming Orlando as well with these insurance rates. So I don't know. So anyway, okay, got it. Well, thank you. So as you're continuing to do your analysis and working on your branding, is that kind of, where do you see that going? How's that what do you see the growth path for that?
Yeah. So this is my probably month 5 into this.
Hmm.
So actually, I explored a little bit. There are a few paths I can choose. I could have choose, and I can talk about that a little bit. So there's two ways I can go technically.
Hmm.
Number one is I become super hands-on. Basically, I move to Texas. I become a full-time operator. I basically control the operations. Or I find partner that I trust
Okay.
and develop partnership and I focus on the raising capital side.
Yep.
So I evaluated these two options and realized maybe it's better for me to focus on the latter option because this is how I'm good at and I can echo with a lot of people in tech industry
Hmm.
because investing in real estate is a good investment thesis. And a
Hmm.
lot of people is struggling about their job security also with their stock equities because they are doubling down into their own market, sorry, into their own company. So there are a lot of education can be done over there to help people to diversify a little bit,
Hmm.
especially in a downtrend market. Because in an uptrend market, double down is a good thing. But right now, you don't really see the tech stock going up a lot. So
Right.
it makes more sense to diversify. So I think my focus right now is basically to build up the brand, which is I'm currently doing on LinkedIn. I post every day,
Okay.
trying to build up the audience and focus on um, capital raising. And
Hmm.
then I establish trust relationship with local GPs in
Hmm.
Texas
Okay.
and collaborate. So this is what I'm thinking right now.
Okay, that makes a lot of sense. Yeah, yeah, sure.
Yeah.
So Frank, as you look back, look at your tech days and think back. Is there a funny story, something that happened to you that you can share?
Um, I actually have a very funny story after, a more funny story after, because text, I think text is more like mundane, routine, boring kind of thing. Like every day is the same. I think I get way more funny story after I become more like an entrepreneur, solopreneur.
Okay.
So because I feel like in tech company, you are technically working with people that basically pass the interview. They have like high degrees from
Yeah.
good schools, right? Like you're not dealing with like random people. But when you into the wild, right? If you talk to people, the universe becomes bigger, and sometimes they are like good people, sometimes they are shady people, and it's interesting of how to learn how diversified this world is. So I was actually looking into a deal 2 weeks ago,
Hmm.
and I was approached by a GP, which I'm not going to say who, but I was approached by a GP, and the waterfall structure is amazingly favored to GP.
Hmm.
It's basically up to a point that like any sophisticated investor don't want to invest in their structure.
Hmm.
And then I talked to them more about that, and I realized the GP is actually compensated huge for raising money,
Hmm.
and the GP themselves have very small like skin in the games. So
Hmm.
this makes me feel like they just want to make the acquisition fee and then just forget about the deals at all. And then I talked to the GPs, and I get very similar consensus and realize all of their past deals had been gone south. And surprisingly, they are still raising money. So I think it's interesting to me because I realize the world is so diversified and there are deals everywhere and also people everywhere. It's really important to find the people you trust. And
Yeah. Yeah.
this kind of conflict of interest is usually not common in the tech world because
Hmm.
everybody share the same contract. But basically, we own stock shares, right? So everybody have a piece of the company, so everybody work together. But in the wild, it's more like maybe the incentive is not aligned, skin in the game is not aligned. So that's
Yeah.
causing a very interesting pattern. So I would say I find it very interesting because I joke about that all the times. I just couldn't expect such a thing happen in tech world.
Yeah.
So
Yeah.
that's an interesting thing.
That is interesting. I haven't had a tech person tell me that the tech world's boring. I have had accountants tell me that the accounting world's boring, but not a tech person. So
Yeah, I mean, tech world is boring in sense of like I was a software engineer, and
yeah,
software engineers are boring because like we don't usually go off for social event. Like whenever there's a company social event or holiday season, like our team always stays at home, or especially
yeah,
me. Like I choose
yeah,
to go home. Yeah, that's funny. But we day drink a lot sometimes. Back at
yeah.
time, you will see like you'll see like a trolley of wines, liquors actually
Hmm.
sitting next to the software engineer's desk, and they drinks.
That's funny. That's funny.
Yeah.
Yeah. So, I kind of came from the tech world, but I was never a technical person. My first half of my career, I ran programs and large projects and whatnot. And the second half of my career, I was in sales. But I did work with some one particular tech person who was an architect. That he was a very funny guy, but we sort of made our own fun, I guess you could say. But anyway, so yeah, gotcha. Okay, good. So you know, as you kind of you obviously had a lot of success in the tech world. But what kind of led you to say, look, I'm going to make a change. I'm really going to do something different. I really kind of want to go down this path, this real estate path. What kind of made that decision for you? What was the deciding factor?
Yeah. So I would say I always have like a business owner dream in my mind. I
Hmm.
know like a lot of people want safety jobs, but I'm
Hmm.
kind of the opposite. I want to be my own boss.
Hmm.
So that's like the seed I planted in my side for many years ago. I was the kid that always wanted to be contrarian. Like everybody in my family have a full-time job, and
Okay.
I don't like it. So I want to be something different. So I know I want to be my own boss, like when I was like 7 years old. I
Hmm.
just don't know how because nobody teach me that, right?
Yep.
Because
Yep.
everybody, like if everybody has a full-time job, they actually don't tell you how to be your own boss. So I kind of have to figure out myself. So one way of figuring out myself is basically joining a smaller company after a smaller company. The
Okay.
first company I joined was Uber, which is not big enough, but that was decent size because it almost about IPO. Then I joined a more like Series D company. Then I joined a day one company. So I'm
Okay.
trying to basically figure out how to start something. And I realized you need to be like jack of all trades because
Okay.
you just need to know everything. You cannot just know how to do programming, right? You need to know business. You need to figure out what product you're selling. You need to
Hmm.
do sales sometimes, right? You have to do marketing, or you have to do like social content. You just have to do everything until
Yeah.
you find somebody to do it for you. But you have to establish the process and know what a good something look like before you delegate to somebody. So actually, I find this problem solving super interesting.
Hmm.
So this basically helped me to do the transition, and it was interesting because I was actually thinking about to do a tech startup, but just recent years the venture capital market is not good, and
Yeah.
everybody was not focused on growth anymore. They focus on profitability, and it's a different way of playing this tech games, and a lot of day one profitable company are not venture backed. So
Yeah.
I actually am thinking about not doing the venture back side and try to start small, try to be profitable, and then grow. Like if at the end of the day I
Yeah.
need to use somebody else's money, I might. Yeah.
Yeah, exactly. I mean, you can focus on growth all day long if you have an unlimited supply of money. But as
Yep.
soon as soon as the venture guys start focusing on profitability, well, then guess what? There's not an unlimited supply of money anymore. So
That's right. That's right. Yeah.
interesting,
Yep.
interesting. Yeah, yeah. So as you were kind of really shifting into leaving the tech world, going into entrepreneurial, doing the real estate side and social media side, what were some obstacles you had to overcome?
Number one is that you immediately lose coaching because in tech world, I'm pretty kind of well connected. So you always
Hmm.
know a role model to follow.
Hmm.
And when you suddenly jump back to entrepreneurship, you have to identify your somebody to follow. And that part is hard because in tech, right? Like for example, I like when I leave, I was a director. I actually know how to become a director many
Hmm.
years back because somebody is always ahead of me and they can teach me how to become like a
Yeah,
director.
yeah.
But in entrepreneur, there's no like a path to follow.
Right.
I mean, like everybody online, even Alex Hamosi and Lala Hamosi, they talk really good stuff about how to build small business. I consume a lot of their content,
Hmm.
but they only teach you small pieces. You still need to figure out a way to puzzle them together, and you need to basically figure out things yourself. This is the interesting part, but this is also the challenging part because sometimes you don't know if you're going on the right direction, and
Yeah.
maybe there's no right direction. So that is frustrating, right? Versus tech company is like the ladder is designed for you, you just climb. Versus in entrepreneurship, you figure out yourself, right?
Right.
So that
Yeah.
part is very different, and also I have to figure out my way to get educated. For
Hmm.
example, you have to join mastermind. You have to find business coaches to actually help you to get there. This is friction because they cost money, which you will never spend that amount of money when you are W-2 worker. So that kind of mindset is important
Hmm.
to me. Yeah.
Yeah, that makes sense. I mean, even though you can learn from others by their story, you can learn from others in terms of seeing what they've done. It's you don't actually get the step by step things to do. You have to invent that along the way.
Yeah.
And to your point, that's where coaches definitely can help shortcut, figuring out what the next step is, but they do cost money. Yeah. So,
Yeah.
and that's a balancing act when maybe in a situation where you have no cash coming in the door as you're trying to figure this
Yeah.
out. And so that's
Yeah.
definitely something you got to be cognizant of. So yeah,
Yeah.
gotcha.
Yeah. Yeah.
So what was your first victory that kind of said to you, yes, this is really the right way?
So
Yeah.
yeah, I had two victories. I have two small wins. It's not really a huge victory, but I have two small wins. Number one is I was a passive investor into multifamily because I didn't even know this is gonna work. Especially recent 2 years, interest rate was high.
Yeah.
So I actually invested in a GP, which later become a very good friend, and we exited 2 months ago,
Hmm.
and the profit was great. Not like skyrocket, but it's a very reasonable profit
Hmm.
due to good management.
Yeah.
So I kind of I have a better conviction of this business model work. And I know I can trust this business model. I can go deeper. So that's like a proof of concept, which is
Hmm.
huge. And
Hmm.
number two is actually I get a lot of support from my friends and family. They are willing to say, "Hey, Frank, if you want to start this, if and you need investor money, here you go." So I have a
Hmm.
lot of soft commitment from my friends and family with bigger check amount that I know I can pull my first trigger.
Hmm.
So these two are good, right? I have my supply side take care of, I have my demand side take care of as well. So I
That's great.
know like this is like MVP proven.
Yeah. Well, that's great. I mean, it definitely, having folks that, other folk, I mean, Kiyosaki talks about, you sort of are going to have, there's a lot of times there's going to be naysayers around you and you kind of have to, stop listening to the noise. And, the fact that you had people around you that were positive and supporting you is incredible. That's great. And as well as, they also believed in you to, be willing to invest money. A lot of times, again, it's not impossible to start from ground zero, but it can be challenging if you don't really have some folks that can write mid five figure checks, $50,000, $100,000 to
Yeah.
invest it with you. And I mean, obviously bigger is better, but at some point in time, if you don't know people that can write the $50,000 checks, you can do it, but it's going to be definitely some work to get to that point where you build relationships
Yeah.
with people that can write those checks. So yeah.
Yeah. I think this is like if I have no connections from my tech industry and
Hmm.
I just started from fresh graduate,
Yeah.
it will be extremely hard to raise so much money,
Yeah.
right? First of all, you have no track record. Why would people invest in you instead of like BlackRock?
Right.
Just because I've been proven like right, I established myself. I'm a good tech worker. I progress very fast. I'm a serious person, right? I have good degrees. I like all of my classmates love me. They kind of trust you that, hey, Frank, if you do whatever you are doing, you're gonna do great. So
Right.
I think there are definitely a trust that is coming along, even though you are changing your industry.
Yeah. Yeah. And again, that goes back to testifies to relationships. And again, you've built great relationships with people over time
Exactly.
and they trust you. And, again, it is a mind shift when you go from being, I'm Frank, the tech, the architect guy. But I'm Frank now, the real estate guy who's raising money, and by the way, you want to invest with me. So,
Yeah.
but having that strong relationship basis is certainly something that no doubt helped that process along the way. So,
Yeah.
yeah,
Exactly.
yeah, good. So where are you today in your journey? Kind of where you see yourself going, Frank? Where do you see the future looking like?
So I think 2023 is very slow because
Mhm.
I think there's always heard on the street that like interest rate is gonna maybe drop down, right? And the floating rate that is about to blow up because a lot of people that they acquired properties a few years back, they're about to have their rate lock expired, and they either have to refinance or they have to have a capital call, and if they are not able to achieve either of these, they're gonna declare uh, a what's the word, like bankrupt or
Insolvency
delinquency.
and bankruptcy. Yeah.
Yeah, insolvency. Yeah, something like that. And this is a time when like good deals happen, right? So we start to see some of these deals coming. They're not great enough. We still lose bid in a bidding war. A lot, maybe like more people just pay higher than us. So I think 2024 they're gonna be opportunity. So we just sit on the sideline and just observe it and
Hmm.
see that happen, and then we deploy cash. So I think there's opportunities in 24, and interest rate is it gets lower. People realize that their CD is not gonna make them enough money. They're gonna deploy money outside. So I see like I have a okay level of hardness or of difficulties to play
Hmm.
the game. It's not like extremely easy or it's not extremely hard.
Hmm.
Yeah.
Okay. Okay. Makes sense. Yeah, definitely. You're right. A lot of people are hoping that we're going to see some rate cuts in 2024. And again, time of recording this, it's late 2023, so we're only a few days from 2024. But
Yeah.
the show will come out in 2024. And
Yeah.
you know, students who know about how the Fed has behaved before in the past, and it's I liken it to they're driving this aircraft carrier that has 1,000 controls, and they're trying to fine tune those controls, and they can really only affect three things, but they've got 1,000 controls that they can't
Yeah.
really mess with. And on top of that, the aircraft carrier doesn't turn on a dime. It turns super slow, and what we wind up finding is that they oftentimes overcorrect. And
Yeah.
you could make the argument that they overcorrected already. And you could also make everybody knows that we know that the low rates were too low for too long. You
Hmm.
know, what was it, 10, 15 years of almost 0%? That's ridiculous. So,
Yeah. Yeah.
so anyway, the rates, the interest rates definitely affect us immediately, much more so than we see the bigger picture, to the point where the Fed says, yes, so they've raised rates too much. There's a lagging effect there. And, traditionally, historically, I guess multiple times it's been identified that when the Fed does cut, they do have to cut, quickly, and because they're pushing the economy into a recession, things like that. So, we obviously don't want people to lose their jobs, to be symptomatic and evident of a recession. But, I do think there is going to be some rate adjustment, hopefully in 2024. And I think you're right. There are going to be some opportunities to see. So
Yeah.
Frank, sorry, go ahead, please.
No. So this is like a hypothesis, right? Because
Mhm.
the interesting thing about investment is that you don't know. I mean, there's everything has a risk, right? Like
Yep.
the safest thing is CD. You just guarantee to make a small upside.
Yep.
Investing in real estate or even the stock market or anything, there's uncertainty, which means
Hmm.
risk, and risk
Hmm.
comes bigger upside.
Yep.
I personally like educated betting on
Hmm.
something that
Hmm.
has asymmetrical upside compared to on downside.
Yep.
So I like basically taking advantage of this kind of asymmetry to try to increase my net worth.
Yep.
So this is the game I like enjoy, because if everything is certain, you guarantee I have like mediocre upside, but I like to take controllable risk for bigger upside.
Yep. Yep.
Yeah.
Educated risk makes sense. And again, you're right. There is more reward with a lot more risk, and then you kind of have to find that point. And every investor also has their risk tolerance. Some people stage in life, past history, whatever is going to cause people to be very conservative, and that's fine,
Right.
But then there also
Yeah.
are people that realize that you can, as again, back to Kiyosaki, manage risk. You learn to manage risk. So you with education, you can manage risk and therefore see higher returns versus just taking this, this super safe and steady approach.
Yeah.
But
This
again,
is also the reason I like real estate because underwriting model, you technically can predict everything, right? So it's a spreadsheet that you can kind of reduce your risk on day zero.
yeah,
There's only like 2 or 3 risks that you cannot control. Number one is interest rate. Number two is basically how much rent can grow. But we can actually mitigate risk by being super conservative, which is why like when we're doing underwriting, we assume very little increase of rent and very conservative interest rate decrease.
yep,
I see other people giving like crazy, unreasonable interest rate. I'm not saying they couldn't happen, but they are only going to make the money if the interest rate goes down to a certain level, which is
right,
not what I want. So,
right,
I think there are a lot of control you can do when you're doing real estate or investing
yeah,
versus stock market investing.
yeah, 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 exactly. And again, we know a lot of people that do this syndication like we do, and we always 2 years ago would laugh and really not not in a good way, not laughing. We would laugh in a not so good way, just at seeing we would see sometimes other people would plan on the future of a compressed cap rate.
Mhm.
You buy at a cap rate and they expect to compress for the exit. Well, that's not really very realistic, and that's certainly not
Yeah.
conservative. That's extremely aggressive.
Yeah.
So we would never do that, ourselves. But anyway, so maybe, Frank, is there anything you do personally, or maybe through your business, you can mention that you do to give back to help others in some way?
Yeah, so I think doing content is a way to get back because I don't
Mm-hmm.
talk about real estate. My content is more general. I talk
Mm-hmm.
about career growth,
Mm-hmm.
I talk about wealth creation, and I
Mm-hmm.
talk about personal growth. So these are the 3 things because I consume a lot. I personally spend a lot of time reading books. I spend money finding coaches to coach me
Mm-hmm.
about that. And I was super lucky to have a mentor that was able to coach me in a career, which makes me progress super fast. So I'm trying to give back to the society by producing content for free and
Right.
hope people can find it helpful. Yeah. So
Wonderful.
that's like, but that's
Yeah.
also the branding side, right? So I'm trying to mimic Alec Hormozi, trying to give up for free. If people find it helpful, we can do business, but it's usually free for 99% of the people.
Awesome. That's great. That's great. Yeah, definitely. So, Frank, what advice would you share with somebody who's considering making a path change?
Um, so I will say that number one, so it doesn't have to be like entrepreneurial type. It can be just change of career. Like for example, change
Mm-hmm.
from accounting to architecture. But that's a pretty big change. But I would say like don't fully commit unless you have a proof of concept. For
Mm-hmm.
example, real estate. I started investing in real estate 5 years ago before I pulled the trigger of committing, right? Like I invest in different kind of properties, like starting from single family condos, then to multifamily.
Mm-hmm.
Then I realized, oh, this business model worked. Then I quit. So
Mm-hmm.
I wouldn't recommend somebody to just um, change negatively, meaning like without really digging into like without too much of information. This is
Yeah.
how I describe it.
Yeah.
I would do like side hustle that basically give you exposure to the other opportunities. I
Mm-hmm.
will probably try as many side hustle as I want. Sometimes you can kill a side hustle very quickly.
Yeah.
Sometimes a side hustle work, you need to double down. And when you realize your side hustle is giving you more upside than your full-time job, then it's time to do the side
Mm-hmm.
hustle.
Yeah.
I've been waiting, like I technically could have started my side hustle a few years back, but I have my own reason, like my legal issue, because I don't have my green card until a few months back. So I could not do that. But
Okay.
if I had no such an issue, I'm probably gonna do that shift maybe a year earlier.
Okay. Okay. Makes a
Yeah.
lot of sense. Yeah. Yeah. Gotcha. Well, good. Well, Frank, what's the best way for folks to reach out to say hello? It sounds like you're being as active on LinkedIn as you are. That might be
Yes,
through
yes.
LinkedIn. Yeah.
Yes. So my LinkedIn is Frank Xia CFA, and my handle is Frank the Tank CFA. I post daily, talk about personal growth, wealth creation, and career growth.
Okay, excellent. We'll put a link to that in the show notes. And really want to thank you for being on the Road Less Travel Show, Frank. We certainly appreciate your time, and we enjoyed having a conversation with you.
Thank you very much, Richard.
Absolutely. It's been our pleasure. So we also want to thank our listeners. Please continue to give us a 5-star rating so we can bring you more great content like our show today with Frank Xia. And we also want to remind everybody of a couple of important things that Park Capital Partners has going. First, we have the Park Capital Partners Value Add Fund, which is a 506c fund open today to accredited investors. Second, we have the Park Capital Partners Foundation, which is another way that Bill and I give back. Way that works quickly is first we fund the operations of the foundation so that all the money donated goes to do its best work, which is to help others. Second, we donate personally. Third, we donate corporately. And finally, when investors invest with us in one of our projects, we make a donation to honor that investor to a pre-selected list of 15 different charities. So please reach out. We're happy to have a conversation anytime. Richard at parkcapitalpartnersllc.com or Bill at parkcapitalpartnersllc.com. Our website is parkcapitalpartnersllc.com. Please reach out. Happy to have a conversation anytime. And remember, folks, the road less traveled may be calling you. We recommend that you listen and take action. Thanks for joining.